Today we'll be talking to someone who's really been multifaceted in the true sense of it. As I've always said, he's had many lives within his life, one life, and he's done many things that a lot of us would dream to. He's built media companies and sold them. He's made some pioneering movies. He's written a book. He runs a non-profit foundation, which has done great work in COVID too. And right now, he's building a very large edutech venture, which impacts India's future. Because if our millennials and our skilled and educated workforce is what will grow India's GDP and solve the problems that India faces, then Ronnie Screwvala has an important role to play in that. Let us welcome Mr. Ronnie Screwvala, who is the chairman of Upgrad, a very well-known entrepreneur. He's been a TV show host himself. I remember he used to do a series for the BBC where he would interview business people almost a decade back. So welcome, Ronnie, and it's a pleasure to speak to you again. First of all, let me start by asking you, the last 8 weeks have been very different from the last 16 months. How have been things for you last 8 weeks, both personally and professionally?
Yeah, well, thank you, Anurag and Anish, for having me here. And just anecdotally, since you said many lives, I think when I was about to sell the media company in 2012, one of my key investors said, Ronnie, a cat has 9 lives. I think you've had about 20. And he was not talking about my diversity. He was talking much more about the number of times I failed, but yet bounced back up to be able to eventually do that. And I think that's something that keeps me going to many extents. And I think that's something that many of us don't keep count of our failures. We keep more count of our successes. But I think that was a good reminder. And since you brought that up, I think the last 8 weeks have been alarming for a lot of people. I think when we started off in 2020 with the pandemic, there was the word uncertainty. I think the last 8 weeks, I would say the biggest word for a lot of people was alarming. And that really is a much higher emotional approach to whatever else, I think the one I personally went through, I have to say, is I do believe that in the first 4 weeks of these 8 weeks, I think I felt more helpless about many things than I have in the last 20 years. And that was also a big revelation for me personally. And I think for a lot more people, if you see anyone who I would interact with, or even people who are talking on social media, there was this sense of, I need to do something, but I don't know what to do. Whatever I do won't be enough. How do I get somebody? I'm sitting in one place and somebody else is crying for help and I can't step out and do that. And I'm not in control of my own destiny. I think that's quite a debilitating emotion, but it also teaches everyone an incredible amount of strength in a very different way. So I think for a lot of people, let's be very clear, there's a lot of deep regret because the scars on a lot of people will be permanent. If you've lost somebody close in the family, which you felt was needless because they didn't get timely medical attention, I don't think that scar goes away. But I think the other part of not feeling helpless for me was, I think, the biggest, what I would say, personal emotional that I felt for the first 4 weeks, and then worked very hard after that I don't want to be in this position ever again.
Absolutely. I think Adam Grant wrote a piece in the Washington Times about his new book, which he's written about how we feel, and he calls it the feeling of languishing. Where we felt helpless, and there was a lack of genuine enthusiasm for the things that we normally have enthusiasm for. I think all of us went through that emotion and felt a state of helplessness. Now let me focus on the fact that currently you are busy in building Upgrad. You raised a couple of weeks back, you raised $120 million. And really, for the first time, we are moving from a degree economy to a skills economy, if I may use that term. Or we're we are literally becoming part of the gig economy. We would, for the last 7 to 10 years, talk about the gig economy, but the gig economy hadn't kicked in the way that it now seems evident that it's a train that has left the station, and really people will focus a lot more on skilling, will focus on upgrading themselves, and every now and then they will do additional courses that will bring new skills which will make them relevant and employable, and hopefully upgrade their own, positions in the companies and help them financially. So give us a sense of the kind of winds aiding that. Of course, there is the digital transformation of every business. Education itself through technology is getting imparted in a hybrid way or a purely digital way.
Yeah.
So give us a sense of what is happening in edutech and what are the advantages that India has as India moves forward.
Yeah, no, it's a very good question. I think, look, Anurag, for me, more than skills, it's really lifelong learning. And the reason I say that and make a differentiator is because for a lot of people, all of us have thought of skills as a little bit more of a lower barometer. We always think of upskilling, and then we think of skilling as a not a daily wage approach, but a little bit on a different level. And therefore you feel, lifelong is the first commitment I think everyone needs to absolutely make right now, because frankly, we don't have much of a choice. So the very fact I think that we are focused on is to explain to people that education or learning is no longer an event. It's not like you did it for the first 18 years or 22 years of your life and then you're done when you throw up that gap and graduate. It's actually lifelong. And the reason the word learning is because it's a little bit more rounded than skilling. And the reason I say that is because as you grow and you start working and then you feel you need to upskill yourself, it's a very different connotation, right? Because you've already had work experience. You're a lot more clearer in life. You are double timing because you're going to carry on with your work and yet you're going to be able to figure that out. You want to increase it to get to a sort of a specialization mode. So it's a much more deeper commitment that everyone needs to make, knowing full well that it's a recurring one. And for us, therefore, in EdTech, taking anonymity out, because online can be viewed very frivolously or not so seriously and a low ROI. And that's because it's a very anonymous medium and you feel I log on, and if I don't log on tomorrow, I'm going to drop out, but nobody will know. So how do you remove anonymity out of online education in the first place? And how do you talk about deep learning? Because learning is not about content consumption. It is not what has happened in the last 12 to 15 months where people take a lecture on a technology platform like the one we're using right now. And they feel that's because it's deep learning. And it's not just lectures substituted by technology. And it's an entire hand-holding process. So most people think digital is impersonal. But the kind of high touch that we have from our mentors and our faculty and the feedback that people get, and then using technology and artificial intelligence to give feedback to people of where they're missing out, actually completes the whole picture. So I think EdTech right now has been evangelized, which is great. It's allowed people even in dining table conversations for the parents to feel, okay, maybe I understand what you were doing in front of the iPad or laptop for that 2 hours every night from 11 p.m. to 1 a.m. versus a query like, really, can you really learn something online? So all that's a plus. Now we need everyone to appreciate how deep learning is going to make a difference. One, and accepting the fact that it is a recurring event in your life for you to just be in the top 50 percentile of your company.
Absolutely. I do a BW Education Wednesday Wisdom, and then tomorrow I talk to Mr. R.S. Pawar of NIT University and founder of NIT, another person very accomplished. And really, they made a point in the past that edutech is not just, content dissemination or talking to the camera. It is deep learning and there is a science to it. So clearly, thank you for articulating that. And clearly, we are more comfortable with digital needs for mediums for everything, whether consumption of content, which was easy, whether it's children attending school, whether we are running our offices, whether we're doing this interview. In traditional times, I fly to Bombay, or when you would be in Delhi, I do it. So I think there's some wiring has changed. We were compelled to change it, and once we experienced the benefits of how it could be done on technology, we kind of sought more deeper engagement with the medium to be able to reach the objective. I want to ask you my third question before I bring in Anusha. In terms of edutech, clearly there is a lot of value. And really, these are early days. So the next decade or the next 2 decades or the 3 decades will really create a mass and attraction. And especially for a 1.45 billion nation, the numbers can be huge. And we are a nation focused on learning, education. We pride in how we how we, study,
Yeah.
we are
Yeah.
proud of it. Parents very proudly say, my children have done this. So give us a sense. We know there is value in edutech and edutech startups, but what about the valuation of the edutech startups? Because nobody can argue with the fact that there is value and tremendous value. However, the valuations seem to be out of whack, or maybe there is something that outsiders don't understand, that the entrepreneurs who can see the future and investors who can share that dream see. So give us a sense of the value of the edtechs and the valuations of edutechs.
Yeah, I mean, I'm not a big proponent of the whole valuation thing. And here's the best way I can describe it. When you're a founder and you start up, you have your own benchmark. And for the rest of your life, you are going to think whatever you do, that your company is undervalued. Even if it's at a $1 trillion, you're going to feel it's undervalued, which is the entrepreneur thing. Broadly, valuation is the beauty is in the eye of the beholder. And therefore, that's the next phase that you go through, which is really where a few cluster of investors actually either look at it like this is a very large market, but most valuations go through the roof when there's an element where there's a herd mentality. Now, I'm a strong believer that a herd mentality, the maximum you see is the backside of the person in front of you. And that's not a great view. But a lot of people feel it's a self-fulfilling prophecy, right? Because you're mouthing and everyone's mouthing the technology sector is hot. Now but 40 people have said it again and again and again. And suddenly now EdTech is hot because of that. So I think valuation benchmarks will just get established over a certain period of time. Right now, I think it's fantastic that you are getting those kind of valuations that allows people to consolidate and build a business where concept selling, marketing, and opening up the market is very important. And I think that happened to e-commerce, right? There were at least 2 decades in which everyone thought, India, touch and feel consumer, pay by credit card, how will e-commerce? But it took 1 or 2 giants to really overspend, get in there and sustain themselves to open up a market. Yes, we all thought deep discounting. Yes, we all thought XYZ. Some of them may not have been the best ones, but when you're market making, there are no logics. There are no precedents. And when you don't have precedents, you have to look at it very differently. So I think EdTech is going through that phase where if there is large capital, bully for it, but the main push for that is primarily occurring because of the simple reason that when you're making a market, you're convincing 100 million working professionals that actually education didn't stop for you and you need to continue every 5 years to learn. You're convincing 60% of people who should have undergraduated but didn't graduate because their socioeconomic reasons forced them to start working at an early stage in life. And now they think it's too late, but actually online is making it not too late. So when you need to actually, and then you got, women coming back into the workforce after raising a family, there's so many elements. We've actually got a whole context where actually even in the army, where you peak and then there's at least 20 years of your life in the armed forces or in the public service that you feel are good. Then you want to come back into the professional life. There's a solution for all of that now. So how do you communicate? How do you evangelize that? That's, I think, the reason why the companies are getting the value that they get. And then I think the premium is commanded really by the entrepreneurs, their loftiness, their vision, their hunger, their push, and their track record to deliver.
And, when you see the edutech pie, again, there are various segments within the sub-segment. There are niches. Give our viewers a sense of the edutech landscape and how is upgrad kind of unique and differentiated in a lot of aspects. And while in some domains it may have competition, and life is about abundance. The more, if the market exists, more the merrier, and clearly it is good for everyone. So give us a sense of the edutech landscape and the segments and niches available within them.
So for us, really, I think from day one, the focus has been everything after K-12. And because we believe that's a market which most people think right now is smaller than K-12. But all of us, and including myself, is highly convinced that that's because we haven't started opening up that market. But it's a market that's even bigger than K-12, not because it's in competition too. The second is I've always believed when I'm building something that the whole is bigger than the sum of the parts. And therefore, one needs to be an extremely integrated organization and company. And therefore, for us, for everyone above K-12, which is undergrad degrees, post-graduation degrees, test prep, enabling colleges, enabling SAS, short-form courses, medium-form courses, long-form courses, and working professionals from the age group of 20, 25, all the way to 55. That's the segment that you're doing that. And I know you mentioned a little earlier about India. I think the pride for all of us is it's originating out of India. If you're looking at most global companies, and I think you've seen that in media for the last many, many years, in the 1990s, where most media companies look at the origination of their content in a particular country, which is most of the time US, and then you sort of want to helicopter land in 160 countries and look at things in a different way. EdTech specifically is not that easy to do, and therefore India is a very large market. I mean, China, India, and the US are really the three largest markets. China is substantially insulated, and for many reasons is not an open market for many. So actually, if you look at the US and India, the ability for this to be a joint approach where between these two you can create some phenomenally valuable companies is really, I think, also a phenomenal opportunity for everyone.
A very compelling case for that, and no wonder that the edutech space is possibly the most growing space in terms of numbers, in terms of evolution. These are early days. So clearly, as you said, you're creating the market, and you and a lot of other players in the segment they are in. Anisha, I'd let you ask the next set of questions.
Good morning, Mr. Screwvala. My question to you would be on your recently released report on non-linear thinking. So in the report, it was mentioned that precedents and case studies of the past no longer serve as guidelines on what can or cannot be accomplished in the present environment. So can you share with us your thoughts on that, and possibly what is its impact on the entrepreneurship in India?
Yeah, I think it's for entrepreneurs. I think it's for career people. I think it's for working professionals. I think it's for CEOs. I think it's for leaders. I think it's for managers. The point of the matter is, I've seen narratives a lot where they says, yeah, but we just tried this a year back and it didn't work. And I think, ask yourselves today, is that really relevant? Because I think the context of relying on precedents, most people come in and say, for the last 5 years, I bring this kind of experience to the table. And I'm saying, okay, but can we talk about what you're going to unlearn first? Okay. Today, even people who complete their management degree realize that when they get into a job, 50% they have to unlearn, 50% it's given them the lots of strengths. Understanding how to use the past. That doesn't mean every case study is not relevant. I think it's phenomenally relevant. As long as you know how to draw from the past and put it into the present. And I think that's really my single communication, that a lot of us rest not just on our laurels about what we may have done in the past, but the fact is why something worked or didn't work. Both may not be relevant a year later, 2 years later, or 3 years later. And the second narrative that we all have, well, this is how I used to do it, or this is how I do it. And then you start with that. If you don't break these two stereotypes, you're not ready for the 21st century. You're definitely not ready for the 22nd century, because that's really where the world is moving, not just from a technology, but consumers are moving that way. People think that technology is hurtling us forward. If the consumer is not matching technology, just technology is not going to get fuel. If the consumer wants it, but technology can't fuel it, you're not going to make that happen. So therefore, questioning the past is a very important part. That doesn't mean that you throw it away, but it definitely means that the precedents of the past are not mostly relevant for the future.
Right. The report is also mentioning that women are one of the best agents for change, and they should be supported and helped to break the glass ceiling. So can you share your comments on that, and possibly what is the way forward for women on?
Well, I'm going to ask you a question. Don't you believe that you're more perceptive than I am when I'm having a conversation? If I had to look at gut feelings, if I look around a room where I'm talking in a room, and if I want to ask 3 people, I'll get some logical answers. And then if I want to really turn to some of my female colleagues and say instinctively what do you feel, I get a tremendously better answer because that instinct and that gut and that ability, because of sensitivity and emotions and empathy, I think completes the picture in a very different way. So that's just on a soft factor. On a more hard factor, I think ambition is latent and it's there with everyone. And I think it needs to get kindled. The 21st century, plus I think the last years of pandemic, are also allowing people to feel that there are no set models of the time you need to spend, the work you need to do, that you need to. It's not an either or, you could do and. Habits have been completely broken up. Most of us have had to leave many of our habits behind. So if a lot of people, if you feel they're feeling unstable, what are you feeling unstable about? You're feeling unstable because you were living in some form of habits and now those habits are being questioned. But it also gives a lot of people the fact that I can do a lot more without the normal stereotype of reporting to an office, sacrificing between homemaking and doing whatever else. That opportunity has become huge. And I think the research says that. It also points out that there is a tremendous amount of kindled ambition that needs to now get harnessed. And I think people are ready to do that.
So according to the World Economic Forum, by 2025, around 85 million jobs may be displaced by a shift in the division of labor between humans and machines. How quickly would you say the technology advancement in India is impacting its job economy?
Very quickly. Very quickly. I think the world, if people want to live in it today, you don't need to be hyper, but you need to overreact. I think the leadership is about overreacting. That doesn't mean, constantly changing. But today, I think leaders need to understand how to overreact constantly, which means be on the alert. Because you can't sit down there and have 5 consultants tell you, well, look, this is how it was. Again, it comes back to the precedent. This is what it was. When people map out something for me and say, look, this is how it, but I said last 10 years, we didn't have this choice. So I think we need to overreact. And to your question, the simple answer is, I think it's moving very quickly. And statistics and data follows some of these trends after that, because you can analyze it slightly differently. But I think today, for the people and the younger generation that wants to get out there are 2 risks. One is just technology in the role. The second is that when you've come up from a digital economy and you've learned from a digital economy, you've learned a very different way. And the consumer is you when you come in there. The people actually 10 years older than you need to adapt because they have not been comfortable with the product. So they haven't used it. They haven't engaged with that. That also can be extremely threatening for a lot of people. So I think the time is very clear to be in consistent mode of overreaction.
I wouldn't call it overreaction. I'll call being very real time in your response and responding. And because the pace of change is so fast, and we're dealing with variables that we didn't deal with, and situations that we didn't deal with. One thing I've learned is never say never. You don't know, what will. So I see what you're saying as being always in a super responsive mode, because the speed of change is very fast. That's how I...
Yeah, without it stressing you out. I just need to be very cautious that it can't stress you out, because then it's negative. If you're constantly in overreacting doesn't mean being wired in a mad manner. And I think there's a strong differentiation between the two. It means when you see something, you take it 5 steps ahead. And I think that's very important.
Okay. Since Anisha asked you this question and I was listening, I want to ask you a question related to it. Of course, as we said, you've been an author, you've done multiple things in multiple sectors. We can always say content has been one constant in those, whether you're making movies, whether building a media company, now edutech, book. What I want to ask you is that about entrepreneurship, what has changed deeply in the last 18 months? Without taking the name of companies are talking of between 16 to 25 billion dollars of valuation companies that have been created in the last 5 years, 7 years, definitely not more than 10 years. Now, that is tremendous value being created. But none of these companies are profitable, or for the next 3 to 5 years may be profitable. So clearly, are we in some way being more exuberant than we should be? Or there is a scarcity premium associated with good companies, or this is the nature of the way private equity and venture capital bets. So they will bet big on some and hoping that they go right. So give us a sense of how entrepreneurship has changed and how everyone I talk to wants to build a big company. So give a sense of, you've seen this for almost 3.5 decades. So give us a sense of...
No, Anurag, I would say to this, firstly, the definition of a big company has to be different for different people. Big company doesn't mean big valuation to start with and then figure out how to build a big business. It has to be that you're building a big business, you have a big vision, and therefore you attract the right kind of capital at the right value. But look, I think this concept of profit and loss will constantly hurt us in the will constantly be a question mark, I would say, in the 21st century. Amazon didn't make money for a lot of period, but at this point, they're worth $1.6 trillion. Microsoft never delivered a dividend for the longest period of time, for most people that were in the top 500 Fortune companies, dividend track record was almost like, that constant is moving around. Third, I think we come from a context where, and I'm a strong advocate of the road to profitability, and profitability is high. So don't get me wrong. I'm not someone who advocates a permanent loss making. There are companies that burn far beyond what they will ever recover. You need to watch out for your cumulative return on capital employed. If you believe that you're burning for even 7 or 8 years, but you burnt the money and that capital employed, and I think that's what Amazon, for example, has done very well, that on an ROCE basis, it's pretty high. If not, the profit context came in an industrial world where you had factories, you had depreciation, you made all your investments upfront, all of your investments went into the balance sheet, and then you depreciated over 10 years, and therefore profitability is a different definition. Today, profitability is a different definition because not many things go to the balance sheet. Not many things have a carrying cost. Marketing is expense 100%, and in a service organization, you don't have the hard assets that would allow you that if somebody spent 1,000 crores to set up a plant, and here you're spending 1,000 crores over 3 years to build your service brand, your product, your technology, you're expensing it. So if at the end of that 3 years, 5 years, 6 years, whatever it is, your capital employed is going to be better, I think there's nothing wrong with that. Because of this thought process, you need a lot more maturity in how you build your business. And I think today, the fault lies more with investors than with entrepreneurs, because frankly, their process is they've come in with a herd mentality, then they're saying push, push, push. When the things go around, they'll say focus on profitability. And we've seen that with the top and what we call the savviest of investors. And they've all done well. So, hey, they work on a law of averages of pushing. An entrepreneur doesn't work on a law of averages and pushing from a perspective. So you need a lot more maturity when you're working on building value, not profitability for a certain period of time. And return of capital employed, I found, is a very strong index for this.
Question would be on the surge of foreign direct investment in India. So recently, as we know, that India has attracted its highest ever foreign direct investment inflow of nearly 82 billion in the financial year of 2020-2021. So can you share a little bit about how it is possibly impacting the growth of entrepreneurship in India, or how is it impacting the existing venture capital firms in India who are supporting Indian startups?
So, 2-3 things. Firstly, I think it's phenomenal that in a pandemic year, we've been able to get to that record high. Second, I think we need to compliment Reliance because the 25% of that FDI has come straight into one organization, company, and a company's vision, which is promising because it's showing incredible belief in scale and incredible belief in the market that is India, because I think Reliance is a strong example of being a very local. They've always said, I'm going to focus on India. Many people by now would have said, I want to go to the globe. I want to list on the New York Stock Exchange. And I think they've said, for the Indians, by the Indians. And I think that's something that, should have a message for a lot of people in ways. The second part, I think, is that, the markets are robust. So foreign direct investment also goes into public listed companies. It's not always in the private listed companies. So that's your second one. So that means there's obviously a firm belief that the price earning ratios in the listed markets are good compared to some of the robust ones in international markets, and that India's growth pattern, notwithstanding a few quarters blip that'll happen, is very robust. So I think those are the 2 thumbs ups on a macro level when you look at these parts. When it comes specifically to entrepreneurs in the ecosystem, I think it is unfortunate, but yet fortunate that FDI really and foreign direct investment actually does fuel the growth even in the private sector. Now that's because there isn't an ecosystem of local funds and local high net worth individuals other than angels who've actually gone out to be strong private equity investors. And I think for me, the 2020 to the 2030 should be about those 20-30 people in India who actually believe in the Indian market and turn and say the capital is going to be. Because why do we need Japanese capital or US capital or Chinese capital to pour in $3 billion into our entrepreneurs? It should be the Indian cyclic way. And I think that mindset has not been there. Plus, many of the founders, most of their wealth is in still listed stock or private stock. So they've never seen those large liquid events. Okay, maybe Premji Invest and some of the others are good examples where they have been able to make investments at scale. But there are not that many of them. So I'd like to see that capital shift there. But the only thing I would say to caution is if you cumulatively take the amounts that have gone into entrepreneurship and startup ecosystem, it's concentrated on few companies and it's concentrated by a few investors. And that has its challenges. It's a thumbs up for a lot of them, but it's not opening up the ecosystem in many ways. So I think it's a cup that is still half full and there's a lot to be done there, both from Indian investors looking at scale and second, a little bit more diversity in the investments. Rather than saying, I'll take you from $3 billion to $4 billion in 4 months in value, that's $200 million that went to flip that valuation. If that went into 10 phenomenally different companies, it can actually open up the entrepreneurial ecosystem much bigger than getting the inflation levels higher because of FOMO.
Let me ask you another question, Ronnie. Again, while for-profit enterprises have grown, the last 8 weeks in pandemic saw a lot for not-for-profit organizations doing great work. And the interest in the social impact space has also been unprecedented. And I know through Swadesh Foundation, you do the work that you do. But give us a sense of what are your predictions for the social impact sector? Do you see that growing in a big way?
I do, and I hope it does for a multiple of reasons. In India, we are a price-sensitive market, but we have to solve problems at scale, and therefore big money has to come in. Today, I'm not sure big money is coming into the social sector or what I would call the social entrepreneurship approach, because I think the mindset has not been clear. You're either a for-profit or you're a not-for-profit. And I think a lot of people in the social entrepreneurship sector feel they're for less profit. And there's no such thing as for less profit. Because if you're for less profit, and if you're a subsidized approach where you're saying, look, I'm going to do a little bit of profit because I want to really impact a lot of people, the problem is you'll do a good job, but it will not be at scale and it will not attract big capital. And therefore, we won't be able to get out of that circle. So my only concern with what I would call social entrepreneurship sector is think big, but think of it commercially, because the amount you'll be able to raise in terms of and attract valuations will allow you to solve the same problem larger. If I want to do a 50-bed hospital and I'm saying I'm a social entrepreneur there and I will run it for profit, but most of my beds are at an average price and therefore I'm giving a 5 to 7% model. You won't be able to attract and make it 50 hospitals with 50 beds in 50 tertiary areas in India. That you can only do if you're saying, look, is my objective to do subsidize for 50 people? Or is my objective that I can access and give medical and health relief to 5 million people? And I think that tick of the entrepreneurship in the social sector has not yet happened to that level, where that says accessibility, more people who can't get a loan from an organized bank, and that's why the whole, MHFCs and whatever, the microfinancing has come about. Those are sectors will grow when they can attract serious capital.
I hope and pray that happens. And you're right that one, being profitable allows you to pursue what you have and scale it up, make a larger impact, which is the starting point of a social impact venture. Ronnie, I want to ask you, in terms of policy making, you talk about capital for India from India. Now, how do you think that will happen? Because really, one of the things that has made Silicon Valley what it is, and the fact that large companies and ideas have become so big, is the fact that they did uber scaling through large infusion of capital. Now, how do you think policy making in India can help in making available larger amounts of capital?
Whenever anyone's gone into really copying something that works somewhere else, it's not been such a great success. And I think cloning and copying, drawing inspiration is good. Cloning and copying is not so much. And I think part of the reason why technology and service companies in the Valley and wherever else have really grown is because, frankly, whether you like it or not, America is a very, very large market. You can get there. The big problem is you need to be highly competitive. Here, in fact, I think we're not such a competitive market. So there is an established market. You're doing much less in market making, but a lot more in the highest level of quality at the absolute right price. And the men and the boys get segregated very here. Here, I think we haven't got that killer instinct of the competitiveness for what we necessarily want to do. So I would caution people who want to compare the element of that absolute gusto that comes with building a company in Silicon Valley, where the market is there. So then you can start and spend big, because you're going to land somewhere big, or you're going to be out completely.
Yeah, it's a zero. It's a 0-1 game. It's a binary game. But all I'm saying, I understand Silicon Valley is unique, America is unique, but I'm saying what needs to happen in policy making so that more capital is available to Indian entrepreneurs?
Well, I think government needs to be an enabler. Today, I think we still are complicated in the level at which it takes to get business done, whether we like it or not. And I know we've come down the ranks from 400 to 150 and 100, but it's still reasonably complicated for entrepreneurs to do business. Because you got the state, then you got the center, then you got the multiple tax regulations, and many other aspects that just makes it not as easy to establish yourself as a market than going anywhere else. The second one, I think, is available, hugely trained talent. I don't think we're investing that kind of level for that kind of expertise. And third, one of my favorite topics is really soft skills. I think if you really want to build something at that level, I think we miss out on the soft skills. I've invested in, have colleagues in, have people that we work in our companies with, incredibly talented people on technology, on product. But somehow on soft skills, we kind of drop the ball, right? Because you can have a phenomenal person, but if they can't communicate the technology idea, they can't do that. That's, I think, a major differentiating factor between some of the Western examples and what we have here, is the differentiating ability to be able to communicate, the confidence, the self-conviction, the ability to tell your story is, whether we like it or not, and it's not unfortunate or fortunate, is 30%, 40% of that extra mile. And I think if the entrepreneurial ecosystem needs that soft skills, we've spoken for almost the better part of the last 40 minutes about, fundraising and value and whatever else. But if you gravitate to some of the things, the people that have been able to articulate their vision with the best amount of clarity and the best amount of conviction are the ones that are actually being able to attract the best capital. So it's not storytelling in a bad way, but it is to a certain level where your ability to get that vision, then you know that if I can convince my investor to do that, I'm going to convince people to come and join me, to come and work with me. I'll attract the best talent. I'll retain the best talent. And that's what makes a phenomenal leader. And I think we underestimate the power of soft skills.
Okay. And you said that in the past, soft skills are the real skills. They are not an adjunct to the functional knowledge that one gains. And I must tell you, I was talking to the CEO of a very large global edutech platform, and they said 2 years back, our top courses would be Python, would be coding related. But he said in the last 16 months in India, our biggest subscribed courses are on communication, on mindfulness, on, soft, skills, as we call them. But really, I think there is a consciousness that we need to add these skills, and I'm sure more and more people will add these skills and become more knowledgeable as well as employable. Because for at least 2-3 decades, we've said that the quality of pass outs we have from our schools, from our colleges, are not employable because of the deficit in soft skills, whether it's in engineering school pass out. But I think that is likely to change in the future. So you and Upgrad are contributing to that. There are other players that are contributing to that. So that's very well.
And Anurag, I'm a product of soft skills. I came from a lower middle class family. Entrepreneurship was definitely not my genes. My father's been a professional. My brother has actually studied, been a doctorate, been a PhD, and I decided to be a BCom, just about pass kind of situation. So I'm a product. In my first entrepreneurial journey, I had no choice but to figure out what is self-confidence, what is communication skills, whatever else, and I had to pick that up. Today, I might feel that I'm a lot more communicative and my ability and whatever else. But at that stage, when you're starting up at 15, 20, 25, you've got to be able to get those skills, because one of my best things that I think has worked for me is my background a little bit in media and theater in those early days, which actually gave me that level of confidence and conviction. So I consider myself a product of soft skills, which is why my second book that I've just written, which is called Skill It, Kill It, is actually only about soft skills. Because I think we're underestimating the power of the change in your career, whether you're a manager or a leader or a CEO. If you're managing more than 2 people, your soft skills levels has to go to the next level. You can be the most smartest person that came out of IIT, but if you can't communicate at that job interview, the other person, unfortunately, who may not be as more technologically advanced as you are, may still get that job. You're on mute, sorry.
I totally agree with you that there's a need for your book. I'm sure a lot of viewers and readers will pick up the book, read it, and help themselves in their immediate circle to be able to upgrade and to be able to add on those soft skills, and really articulation, communication, being able to listen, not just talk, is very, very important. So thank you, Ronnie.
Thank you.
We look forward to reviewing that book, reading that book, and maybe doing a session just on the book itself.
Yeah.
But that's another day. Back to you, Anisha, for your next set of questions.
I have one question that is, like, you scaled and succeeded in an extensive range of industries, and that has been in non-profits, private equity, media and industry, and these are very extensive range of industries. They operate very differently from one another. Would you say that there are certain common success factors while scaling, when you start scaling an enterprise as a non-profit?
Yes, I think there are, and I think it is exactly that. When you have to think big, and you have to break the glass ceiling, as we talked about a little earlier when you asked me that, women are there to break glass ceilings. I mean, and I think we kind of get stuck with the glass ceiling, right? Because the glass ceiling is meant to be broken. Otherwise, it wouldn't be a glass ceiling. They called it a glass ceiling because somebody needs to smash it. So I think if I combine with some of the things I said a little earlier, but I think India is a price-sensitive market. It is a complex market, but it's a market with scale. And if you can crack that, you can get to scale. So I think if somebody operating, especially in India, you don't have much of a choice. You have to think of scale, because price and ARPU is not going to be, barring a few people that may form a strong niche for themselves, is not going to be the needle mover. And therefore, you'll have to think of your strategies with scale, whether you like it or not. And you can start at a particular direction, but unless it's not about thinking big, it's about the market, and a pan-Indian market. And most of us feel, I need to go to the tier 2 or tier 3 city. Well, let's be very clear. 75% of the people in the top 5 cities actually are tier 2, tier 3 people in that. And I think we missed that boat. We look at Bombay, Bangalore, Delhi, Calcutta, Hyderabad, whichever way you want to decide, and maybe a few more cities, and think that represents that. But 75% of the people in there have come from tier 2 and tier 3 cities with a different kind of ambition. So if you crack markets in a very different manner, you have absolutely no choice but to think of scale. And I think from my early days, to answer your question extremely directly, yes, I think whether it was in media, whether it is today in education, whether it's been in the not-for-profit space where we said we wanted to go straight to 1 million people, whether it's in anything that one has done, I think the context of it, how do you scale that up, is a must to do if you really want to get anywhere. That doesn't mean boutique is wrong. That doesn't mean boutique is a bad idea. But I would say that if you really want to, and that doesn't mean you can't succeed if you're a boutique. But then be clear, there's nothing wrong with niche and boutique. But then don't plan a strategy where you want to grow at a different level, because then be perfect in that element of being niche or boutique. Otherwise, you have no choice but to think of scale.
A lot of early stage startups and even SMBs of India are confronting very unprecedented times due to the pandemic. So do you think post the pandemic, there will be certain specific trends in the industry that will emerge?
No, I don't think anyone should take anything for granted. And I think there is no trodden paths. And I think consumers will change their path. Today, I think there's a major disruption in the wallet share that a consumer wants to spend. 3 years back, 4 years back, it was very different. What you allocated for recreation, what you allocated for savings, what you allocated for your bare essentials, I think that's changed substantially, because the thinking, the family approach, crisis on health, need for being a lot more tanked up in education has changed wallet shares, and you need to follow that with people. Second, I think more than ever before, the future is really going to be left for visionaries and for people who have the guts to make markets and not go on the trodden path. I think the next 10 years is really about the path not so trodden that's going to be able to break the mold, rather than, which is why, again, coming back to my core of my report, which is how relevant is the past? How long are you going to rely on your precedents? Number one. And the second one is, what are the risks you're taking? Because I think when you talk to even your core colleague members, and we're having a session here and I'm having a mentoring session, my first thing is, so how many risks have you taken? And they think, oh, wait a minute, I'm part of a company you're working in, you want me to take risks? And I'm saying, absolutely. And you think risks is only for entrepreneurs. Risk is at every given stage for every single individual wanting to grow. So the question is, what are the risks you're taking? Because once you take those risks and you let a little bit of the precedent go off, I think the upside is unlimited. But be clear, there'll be more failures than successes. I want to repeat that. There will be more failures than successes. If you ask me today on my ratio, I think my ratio is about 8 failures and 2 successes. But the point is that when you fail, make sure that it's a binary output and it's 1x, okay? Whatever it was, either it was in terms of time or an enterprise or a service or a capital amount that went there. And you've lost that. But the 2 successes need to be 20x. Because if you focus, and if you haven't done those 8 failures, you're never going to get the 20x, because then everything else is going to be in that 1 to 1.5. And then your odds are going to be against you. And I think that's worked for me very well, because to me, the 8 failures are a minus 8x. But the 2 successes, if they're 20x, is a plus 40x. And therefore the deficit is a positive 32. Now, it's not a mathematical calculation. I'm not giving an algorithm, but I'm just talking about that's how you need to look at things. And therefore go back to, if I keep going back to saying, this is what I did in media, now I can do this in education, it's a gone case. Oh, this is what I learned for the first 20 years. Of course you learned. What you learned is making your gut and your instinct and your ability to take decisions a lot more confident. But if you're going to rely on how you did it every time else, you're actually going to make a mess of it. And I think lastly, on a much more smaller note, most of us feel I moved a sector, and the first thing you look at is hiring the same people that worked with you before, finding the people. And that's also, there's nothing wrong with it again. But to me, it's a dead giveaway, because it's like, I want to stay in my comfort zone, right? Because it's so much, these people, I worked together for 7 years with them. They'll finish my sentence for me. We know each other so well. And then we get into our comfort zone. And I think that's the other problem.
And Ronnie, you have 2 very young co-founders in Mayank and Falgun. Falgun. Now, I'm sure they look up to you for various reasons. We talked about the concept of reverse mentoring. What do you learn from them?
Oh,
I'm sure
tons.
they learn.
It's a phenomenal combination and tons of it, because frankly, the kind of domain knowledge, the ability for them to be much more closer to the consumer. And today, everyone is very much into asking the right questions across the board. So I think from a technology and a product point of view, there's a lot I need to understand and learn from that. So there's a experience. If I only bring experience to the table, I'm going to bore my two co-founders, and that tank will get over in about 3 or 4 months. So for me, I need to be on my toes, and for them, I keep them on their toes. And I think that's a great combination, but they're keeping me on my toes also. And I think that actual differentiation is not much of an age gap. It's the attitude similarity of how hungry we are and how badly we want to change this sector. What do we really want to do? If those goals are aligned, then it doesn't make a difference whether there's a gap of 20 years. Because if you start saying, wait a minute, you don't understand this. This is what I've done for the last 20 years. This is how it gets done. Then there's no unlearning and there's not going to be an acceptability. So I think the learning I get from them is I smash all the past precedents, because in any case, we're leading up to a complete different. So actually, it's a phenomenal one. I think it'd be extremely boring if there were 3 of us with similar experiences and similar sense of density of knowledge and similar age groups. I don't think there'd be much more of a clash.
Okay, Anisha?
I have one more sector-specific question. That is on the recent increment of investments in the cryptocurrency section in India. And we are seeing that there is a cryptocurrency section in India. Even recently, Mark Cuban has invested in one of the Indian cryptocurrency startups in India. What is your opinion on this? And do you think cryptocurrency is here to stay in India?
I have to say, I'm the wrong guy, but I really don't have an opinion on this. And I just feel that I don't know whether it's a flash in the pan. I don't know whether I can accept it with credibility. But it's like a balance sheet item. There is a debtor and there's a creditor. There's an asset and there's a liability. And there is a reason why there's a Fort Knox and why gold bullion is needed for the currency. And when the US prints 6 trillion to get people out of a pandemic, there is going to be a accountability at some stage, either in terms of inflation or debt or servicing. So I think this origination of a currency that can be, I think will need some stability. Now, the reason I'm saying it with caution is I don't personally identify with it at all. But I do know that from mad things comes sanity at some stage. So I think if there is a group of people that understand that now this is phenomenal and we broke the mold, but now I need to change that into something very different, then it'll change.
Again, crypto, different people have different point of view. But clearly, blockchain is here to change the world, and it's already changing the world in manufacturing in every sector. So, again, what happens in an area like crypto, sometimes the kind of players that get in are very short-term oriented. Let me put it this way. And I think that takes away the good.
There's a sheer disruptiveness of it that cannot be ignored. Is all I would say. Because sometimes country borders have created things with limited ability, and now somebody's looking at it as a much more horizontal versus a vertical. So that's why I would say I don't identify with it, but I think it is definitely not something to be ignored, primarily because when you're working on such a horizontal basis versus a vertical, some disruption may take a little bit of things. A lot of people could lose money. Some people can get hurt, but that's how something really disruptive can come out of it.
Okay.
Thank you.
My last question before I let Anisha ask the last question. Ronnie, you've done it everything. You've done many successful ventures. You've exited businesses. You incubated businesses. Now you are in the thick of building a very large enterprise. You've now written this book on skilling and what the new set of skills and soft skills that everyone needs to have. What is left for Ronnie to do? Is there something that in your bucket list you believe that you should be doing?
So, firstly, there's no question about anyone saying I've done everything. There's no such thing as that. I think from time to time, serendipity has guided me in many ways to go with what I feel was my passion. I started at a raw stage in entrepreneurship when I wasn't ready, and therefore you go with a lot more opportunistic approach. Then you mature and you get into a lot different. So I think I've gone to places where my criterion of solving something at scale, creating impact, but at the same time enjoying what I'm doing. And I think I've been very fortunate and blessed to do that in spite of the multiple failures. So I think it's 130% that I haven't done everything in that sense. I'd like to be a voracious reader. I'd like to look at philosophy. I'd like to look at so many different things, but not with any regret if I've not done that. Today, I think for me, the combination of what I'm doing in the not-for-profit and profit sector for impact, disrupting sectors, without really the compulsion that I need to balance anything else, I think is something that I feel is my best years ahead of me. Because I think for the next decade or two, I think my best years ahead of me, primarily with what I think I can do. And I want to capitalize on that.
Thank you, Dr. Batra. My last question would be in kind of like the same lines of what Dr. Batra just asked. So a lot of aspiring entrepreneurs, established entrepreneurs, young professionals would be watching this video. And of course, so many entrepreneurs in India look up to your journey and has been inspired by your journey to start out on their own. So what is your message for them?
Well, don't make deals and shortcuts to what you want to do. I think a lot of people actually think of plan Bs at a very early stage. Okay, if this doesn't work, then I'll try this. If this doesn't work, I'll go back and do a job. So close the doors on all plan Bs, stick with plan As. It's worked for me, even at the most dire circumstances and failure. That's one. I think plan Bs are much more when you're in management B school, but really in the real life, focus on your plan A most of the time. And I think the second one, equally important, is you got to stick it out. I think for a lot of people, we kind of may call it a day and feel maybe this is not. And then because we don't stick it out, with every non-sticking out, you're lowering your level of self-conviction and level of self-confidence. So I think that would be the second one. Just stick it out because you can't time success and you can't time failure. And the third one really is it boils down to self. Your self-conviction, because if you're running something or creating something based on what you think other people will think of you, and a lot of us actually waste a lot of time doing that, you're wasting that time. That time is not coming back to you. So if you've got self-conviction, nobody's going to be able to put you down. But if you don't have any self-conviction, no 20 mentors are going to get you to take a hard call decision. So I think that kind of maybe 2-3 strong messages that I have.